30 reasons not to invest. So hi everyone, welcome to the channel. My name is Bill, and if I haven't met you yet, I'm a certified financial planner with Financial Cornerstone Group, and I got this really cool infographic from our friends over at Advisors Capital Management, and it was titled 30 Reasons Not to Invest Within the Last 30 Years. I will include it in the link below in the description so you can go ahead and get that and look at it yourself. We're going to put it up on the screen real quick. And it's pretty interesting. It has, for every year for the last 30 years, it has an occurrence. For example, in 1995, the Oklahoma City bombing caused the markets to have an intra-year decline of 3%. In 1996, the U.S. budget crisis had an intra-year decline of 8%. In 97, the avian bird flu made the markets have an intra-year drop of 11%, and so on and so forth for the last 30 years. So, but what I did want to bring your attention to was that on January 4th of 1993, the S&P 500 was at 435.7. And if you fast forward to December 31st of 2022, the S&P 500 was at 3,839.5, which actually is an increase of 781%. So, why am I bringing this up? So we as humans can talk ourselves out of anything. Now's not a good time. I shouldn't be doing this now. Economy's terrible. And that, there are definitely times where investing might not seem like the right course of action. You may have high interest debt that you need to take care of. You may not have an adequate emergency fund to take care of any short-term emergencies that happen. I talked about that in another video. But for our young friends and our young clients and families, there really isn't a magical time. If you're able to, if your budget allows, your cash flow allows, getting started earlier and better. And being consistent is the key. Consistency is the key. Making a habit out of it. Fitting it into your budget, making it part of your lifestyle, really. So you could go back 30 years and you could see 30 excuses why you shouldn't invest in markets. But as you can see, if you had sat out for a number of those years, you missed out on 780% of gains. Of course, I'm oversimplifying it a little bit, and folks who are nearing retirement, it's a little bit of a different story there. But in short term, there is a lot of volatility in the markets, especially this year, especially last year. But the ride over a longer period of time is a lot smoother. We're going to go throw that up on the screen too. This is looking back from 1994 all the way up to 2022. And so the trend is always up. It's always an upward direction for trend. There is a lot of volatility in the short run. So why am I showing this? I want to highlight that consistency is the key, and saving money in the right buckets, which is a subject for another video, being consistent about it, and you will be successful. I hope that this helped, and if it did, like, subscribe. I'll see you in the next video. Thank you for sharing, and remember to be good to yourself and be good to others. Thank you.